We move on now to Asia, where the markets there closed mostly in the green today after tech stocks extended their losses stateside. In Japan, the Nikkei 225 dipped 0.05% to close at 19,898.75, while South Korea's benchmark Kospi index rose 0.71%. The Australian ASX 200 surged 1.67% to finish the session at 5,772.8. Markets were driven by broad-based strength, with the financial sub-index leading gains and trading higher by 2.39%. Hong Kong's Hang Seng Index traded 0.35% higher. Markets on the mainland also traded higher, with the Shanghai Composite closing 0.46% and the Shenzhen Composite jumping 1.25%. To commodities now, oil prices rose slightly today after Saudi Arabia said it will make significant export cuts in July amid signs of a drawdown in U.S. crude inventories, though increasing U.S. output continues to weigh on the market. Brent crude futures were at $48.64 per barrel, up 35 cents, while benchmark U.S. crude was at $46.38 per barrel, up 30 cents. Saudi Arabia, the world's top exporter, is leading an effort by the Organization of the Petroleum Exporting Countries, Russia, and other producers to cut output by almost 1.8 million barrels per day through March 2018 to prop up prices. During the first half of the year, there were doubts over OPEC's compliance with its own pledges. Saudi officials now say they are making real cuts, including 300,000 barrels per day to Asia for July, although several Asian refiners said they were receiving their full allocation. And gold held steady today as investors remained cautious ahead of a two-day U.S. Federal Reserve meeting that is likely to provide hints on the central bank's interest rate policy for the remainder of the year. The Fed is widely expected to hike interest rates during the policy meeting beginning today, but the focus is on whether the central bank thinks the U.S. economy is robust enough to withstand further rate increases through 2017. Spot gold was down 0.1% at $1,264 per ounce. Earlier in the session, it hit a low of $1,262, its weakest since June 2. U.S. gold futures for August delivery dropped 0.2% to $1,266 per ounce. And away from the markets, German Chancellor Angela Merkel on Monday opened the G20 Africa Partnership Conference in Berlin. The two-day summit brings together heads of states, ministers, NGOs, and business representatives from Group of 20 and African countries under the motto, Investing in a Common Future. Speaking at the opening of the conference, Merkel says that working together to promote development in Africa was crucial to ensuring the positive development of the world as a whole.
We know
that the world will not be able to develop in a good way unless all continents are part of that development. And of course, that means, above all, that in the coming years, the African continent must continue its development and become more dynamic. For many years, politicians working in development have not paid enough attention to the issue of security. For many years, we felt good if we did not concern ourselves with military build-up. But some of you have said to me, what are we supposed to do? On the one hand, we are supposed to fight terrorism, but on the other hand, we do not get any support from you in this regard. I think we have to be honest and say development can only occur in places where security is ensured. If the lack of hope is too great in Africa, then of course there will be young people who believe they have to seek a new life somewhere else in the world. So if we work together with you to help your countries, then we also create more security for ourselves and we can put a stop to people illegally profiting from the fate of others.
Time, the OECD, AFDB on Africa economy will, of course, pick up this year and next. Presenting their latest forecast at the sidelines of G20 Africa Summit in Berlin, both organizations forecast gross domestic product to expand by 3.4% this year, after 2.2% in the previous year. For 2018, OECD and AFDB expect the upturn to gain further momentum with a predicted expansion rate of 4.3%. We'll take a break. We'll be back in a moment. Do stay with us.